welcome. You're watching Business Today TV. I'm Sakshi, Batra. Well, the big news is out. RBI Governor Shaktikanta has announced the policy decisions of the June 6 to 8 meeting of the Monetary Policy Committee. And now to discuss what these policy decisions really mean for the economy at large, the markets, and the common man, I have an entire panel of experts. Joining it with me is Pankaj Bansal. He's the CBO at bankbazaar.com. I also have with me Siddharth Zarabi, Managing Editor, Business Today TV, and Anand Adhikari as well, Managing Editor, Business Today magazine. Welcome, panelists. Good morning to all of you. Thank you so much for taking the time out for this discussion. Well, first up, let me just tell at the outset that the Business Today poll really indicated that there will be a 50 basis points hike in the repo rate, and that's exactly what we have seen in the policy announcements today. There was an expectation that there will not be any CRR hike as per expectation yet again, and there will be an inflation forecast revision on the upward side. All of these things had come up in our Business Today poll, and we are glad to report that all of these decisions have come out as per expectations. Let me come to you, Siddharth sir, first for the first comment on what do you think of the policy announcements? Is it as per the expectations at large?
Very clearly, what the Monetary Policy Committee has done is to not now surprise the markets once again and the general economy. And therefore, like you correctly said, the expectation has been fulfilled. And when you look at the current repo rate, which has become effective, as the governor pointed out during his statement, it is still below pre-policy level. So if you take 40 plus 50, 90, I think there's headroom of another 35 basis points, if I am not wrong, that is left. And I suspect that the overall tone and tenor of the RBI's communication, and that communication is extremely important, is that the focus remains to control inflation, which means that if you look at the other part of the RBI's statement, the MPC's reading of the inflation scenario of 6.7% for this year, and more importantly, the governor specifically saying that inflation will remain above the target level upper band till at least December this year. And if you take into account his appeal to the states to cut VAT duties on fuel, petrol and diesel, then inflation and controlling and taming the monster of inflation is at center stage. The growth target has been retained at 7.2%. And therefore, I think the RBI is being conservative. You might hear a newer commentary once inflation starts to come under control. Sakshi.
Absolutely. Pankaj, let me come to you for your first thoughts on the RBI policy announcements today. Is it as per your expectations as well? And what do you make of? I mean, we've already seen the bond yields rise, cheering the announcements right there, 7.44 right there. So it is as per the expectations. The stock markets, of course, have been subdued. You're seeing only the banks rise, the other rate sensitive still down in trade right now. Your first thoughts?
I think I'll agree with Siddharth, actually, in the sense that obviously it was expected. This something which the accommodative stance pre-COVID and post-COVID, right? When you look at it, you have to balance it out. So RBI so far, because the COVID infractions happening in the country and surge happening, obviously it was an accommodative stance. But when the inflation rises to 7.5% that we have seen in the last few quarters, right, it's become very, very imperative for the RBI to take a very aggressive stand. And I think this is the right thing to do for the country in terms of the long run. Second, I think the most important thing he has already articulated is that banking liquidity is still there, right? There is not dearth of liquidity in the system. So that's very important when you look at growth balancing along with economy. Because if you have a liquidity in the system, you are able to balance the growth with the liquidity into the system. So I think that's something I'm very happy with, that kind of a stance. Point, obviously, there will be consumers will have to pay more interest on their retail assets that they've taken, like home loans, personal loans, and so on and so forth. Obviously, there is a stress on the consumer side. But on an overall economy, if this inflation, and I think is assumed over $105 barrel for the oil in the next 9 months, if it continues and it comes down after this war and all, hopefully we will have a good news coming in. But right now, I think it's the right thing to do. And I think everybody was expecting this to happen. There is no surprises from the industry, that I would say.
Right, absolutely, Pankaj. We will come to you on the kind of quantum that this could be passed on in terms of loans and EMI raise for all the consumers right there. I'll come to you for that. But Anand, what is your first take? Of course, some unanimous voting of the withdrawal of accommodation at this point in time. What do you make of that? And since Siddharth also pointed out that still the repo rate is below the pre-pandemic level, so there is still some room. So do you expect the RBI to continue raising the rates even in the next few policies?
Yes, Sakshi. Sakshi, if you see the the inflation projection, 6.7% for 2023. Everybody was expecting at the upper limit 6.5%. Now 6.7%. RBI has a mandate from the parliament to target inflation at 4%. Upper band is 6%. So we are talking about 6.7% for the entire year in 2023. So I expect more hikes, going forward. Maybe another 40-50 basis point in the next policy, or maybe the next two policies. Second, I was, surprised with the growth target. They have retained the growth target at 7.2%. If you see yesterday the World Bank, they have reduced big time from 8.7% to 7.5%. Other agencies also have reduced in the past. So I'm a bit surprised on the GDP side. They have retained the target at 7.2%. Now, on the withdrawal, that process has already started, Sakshi. If you see the SDF rate, the corridor earlier with reverse repo used to be 25 basis points. So they have retained that, and they have brought in this new tool, SDF, in case of reverse repo. So the withdrawal process has already started. Maybe some disappointment on the CRR side. I mean, people must be expecting, they will go full hog. Apart from raising rates, they will raise the CRR also. I mean, that has not happened. But the process has already been started.
Absolutely. Siddharth, I wanted to understand from you also, retaining the growth target at 7.2%, of course, the upward revision on inflation has come in. There is a lingering war that he constantly talked about, that is a major cause of concern right now. It's not only causing the inflationary pressures right now, it is also disrupting trade, it is also disrupting growth at this point in time. So what really happens to those concerns of stagflation that we were talking about earlier?
Well, for that, you have to pass through what the governor said as far as demand is concerned, because growth is dependent on demand. And of course, there's a supply shock to the economy, which is disrupting the whole price equation, so to say, price equilibrium. On demand, he made two clear points, and these were nuanced points, which I would like all of our viewers to appreciate, because sometimes RBI speak is very difficult, even for professional economists. So I'll try my whatever little I can. He said, and these are my words, that urban demand is fine, and the rural demand, which had been impacted, is going to improve or continue to improve. What does that tell you? There is a Bharat versus India story that plays out when it comes to inflation and when it comes to growth. We have seen, and I'll just give one example. We have seen, upper level housing, luxury housing, premium housing doing pretty well in the 2 seasons that have just passed. However, we have seen that affordable housing seems to have been knocked flat. There is no talk, there is no advertisement of affordable housing. If you connect that, what does it tell you? That organized sector employment, organized sector wages, organized sector businesses have adapted and come out of COVID relatively faster, and their impact or their exposure to rising fuel prices, rising food prices is lesser versus those who are at lower income levels. Bharat gets impacted by petrol and diesel prices and higher food prices than those who have higher surplus incomes. If this is to be true, what is likely to play out? I hope and pray, and this is what the forecasters are saying, that this monsoon is on track fully. Once monsoon is on track, it causes some minor disruptions when it comes to certain food prices because of excessive rainfall in some areas. But the monsoon is a major factor for rural demand. If rural demand grows and government spending continues, we can expect the headline growth number to be maintained. What will happen on a quarterly basis, and when you aggregate it, there is, of course, a question mark. I was conversing with someone who said that growth is likely to be 6.7% and not 7.2. Some professional economists are already marking down the GDP estimate by 50 basis points. But I would say let's wait for the next 3 months. Let's wait for monsoon to end. If states take action on VAT of petrol and diesel, and if there is more stability on international crude oil pricing, I think we may have a more stable set of numbers to discuss 2 or 3 months down the line, Sakshi.
Okay.
Just to add,
absolutely,
what Siddharth said, when Governor mentioned about this capital capacity utilization, he said that he has gone up from 70 to 74%. I think in the last 2 quarters, and then he talked about this deleveraged sheet. But we are not saying, if capacity goes to, let's say, 80-85%, then the corporates will start investing. That is not happening. It's still low. And number 2, he talked about the government capital expenditure, which is like 7.5 lakh crore, which they have budgeted. Now with this excise cut, because with crude going up at 120 US dollar per barrel, and we have already seen excise cuts that will lead to some revenue loss of maybe 1 lakh plus. We don't know going forward again if it remains at 120, 130. I'm sure there will be some more excise cuts. So there are constraints on the government side also. Now similarly on the corporate tax collection, I'm sure we have higher GST, higher inflation. But look at the corporates. I mean, there the margins are shrinking. There will be some pass through, but I guess corporate tax collection will get impacted. So it's good that government is investing. I mean, they have planned to invest, but there are constraints there. So on capacity utilization, government can expand. So these are 2 points where I have some doubts.
Absolutely understood that. Pankaj, I wanted to come on to you just to continue with what Siddharth was initially pointing out. Do you buy these two numbers, 6.7% inflation forecast and 7.2% growth forecast? Especially keeping in mind that the governor did point out that on the crude front, they have priced in $105 per barrel. Right now, we are sitting at $120 per barrel. Will there be easing on that front, continuing with the war prices? I mean, the war may continue going forward. We don't know for how long. And we have no visibility of how the prices of crude will move forward from here. So what gives the governor confidence that the crude prices will actually slip to this level?
So basically, it's actually what is happening, right? It's an overall forecast, the weighted average forecast. So it's not that it happen immediately a month or 2 months. It's an overall forecast for maybe next 6 months, I would say, 2 quarters from now. The expectation is very simple. See, today, there are 2 important factors that I'll put in. See, one, obviously, there is always a positivity around the global market that you see, in terms of once you slip down, you've already got to $120. It'll have to come based on demand and supply equation that you see globally. So this, we also expect that in the overall scheme of things, 6 months from now, it will be weighted average, it will come down. That's point number 1. Point number 2, I think on the growth, the most important factor is also mentioned is monsoon has to be normal. That's what, that's the second assumption. So one is your $105 price on the crude. Second is your monsoon has to be normal. The forecast looks like it's normal. So obviously, if there are deviations around it, there will be an impact on the overall forecasting going forward. So these are all assumptions that you take when you actually do it. Nobody can make it right or wrong. Nobody forecasted that 4.5%, 5% inflation will just jump to 6.5%, 7% inflation. But the good news is that the recent rate cut that we have seen in our petrol and diesel, this should come into picture, roll into the economy, and we will see some numbers on the inflation going to come down the next maybe 2 to 3 months. It takes time because it's a large scale phenomena. So overall, all put together in the next 2 quarters from now, I think we will go with these numbers, what the governor has pointed out, and we will stick to it in terms of, and obviously the easing of war with Ukraine and Russia can help this particular, because obviously there will be discussion. It cannot continue, right, till eternity. Everything has to end somewhere. So some positive movement can happen, and I'm sure things can be better off going forward in the next 6 months, is what our view is also the same.
Okay, understood that. Anand, would you like to also add to that part? I know you've been saying that, you're a little surprised on that 7.2% mark on the GDP, especially keeping all these factors in mind that the investment cycle hasn't picked up yet, and we want to see that happen. Even though all eyes are on monsoon, Siddharth pointed out 3 months down the line, we'll have to see the real picture growing right there. But what do you really make of the growth scenario, demand scenario, what Siddharth was saying, overall in the entire economy, like he was pointed out, rural economy and the urban economy? How is that poised to grow forward?
I mean, I was just, listening to the governor when he's talked about the upside risk, like Pankaj mentioned. See, if you see, I'm sure the government or the RBI must have factored the upside cuts when they said 6.7% inflation. And governor talked about the upside risk in higher global, commodity prices. He talked about the commodity prices. He talked about supply side issue. He talked about the pass through. The companies are going to pass through, higher prices to consumers. He mentioned about the tomato prices. And the elevated, interest prices. So, the big threat is going to come from the inflation.
Yeah.
If you have a low and stable inflation, is good for a sustained growth. Now at 6.7% inflation, I have a doubt whether we can retain GDP as 7%.
Okay. Siddharth, I wanted to ask your view on what do you make of the, statements by the governor with respect to how they will be monitoring the GSEC market very, very closely to take the measures if required for an orderly government borrowing program. Where do we stand at over that front at this point in time?
At this point of time, Sakshi, given the trend in tax collections, I would expect that the government will not need to exceed its borrowing target for the current financial year. As you know, the government first projects a number for its borrowing to fill the fiscal gap on the 1st of February. And then there is a first supplementary demand that the government seeks from Parliament, followed by a second and a third one. And the fourth and final is actually the final statement of accounts on 1st of February. So that's point number one. Point number two. If tax collections continue to outperform, and I use that word outperform very carefully because we have seen that trend due to various factors, then you will see that perhaps in the last quarter, the government and the RBI could consider providing a positive signal on that front. At this point, with only 2 months and a few days of the current fiscal year, I think it is too early for us to do a final reading of the government's borrowing plans. Will spending continue? Of course, it will do. Can the level of subsidies go even higher? Of course, especially on the fertilizer side, due to what is happening due to fuel inputs. Do you expect fuel subsidy to go up? In a way, it is already going up because oil marketing companies have been stopped once again from passing on prices. So it's very early to be discussing those numbers. And frankly, Sakshi, since we have Pankaj here, I just have a question which I am asking him to you, which is, आम आदमी के बैलेंस शीट पे क्या असर पड़ेगा? Because I think this 90 basis points increase, and what you, Sakshi, said at the very start of how much the pass through will happen in lending rates and whether savings rates will go up. I think that's the point, Sakshi.
Yes, absolutely, Pankaj.
Yeah, so I'll tell you, Siddharth, I think, and Sakshi, obviously there will be dent on the pockets of all the consumers. There is no doubt. So if you look at pre-April, right, we were trading in housing at a minimum rate of 6.5%. We're expecting this rate to go to about 7.5 to quarter to 8 as a expected rate. Now, just to give you a number, if the rate from 7% for a 20-year home loan increases to 7.5 or 7.6, broadly the impact is about 24 more EMIs a customer has to pay in the tenure. That means 2 more years that he has to pay. So for example, I'm paying for 20 years, I'll have to pay 22 years now. This is a very simple mathematical calculation. And the second is that normally what we have seen, people don't restructure their EMIs. The tenure gets adjusted because we don't want to restructure the entire loan agreements with the consumer. So obviously the EMI gets, the tenure gets adjusted with the extension version of extension.
Yes.
That's on home loan side. On a personal loan, obviously the interest rates will go up significantly the same number. We are expecting about last repo rate, we were, I think 4.5% interest got up. Now with this new 50 basis point more coming in, again 5-6% more will add. So overall, you'll pay about 8-9% extra interest that you were paying on your retail assets like personal loans, your credit cards, or all your assets that you use, where cost of fund is involved. So this is on the retail asset side. So obviously every consumer who has taken a retail asset product will have to shell more in terms of either the EMI or in the terms of tenure that he has to pay. So that's one on the retail assets. Coming to deposits, it's a very interesting, Siddharth, phenomena is that, and Sakshi, is that when you look at deposits not a function of just interest rates or repo rates and all that stuff. It's a function of the liquidity the bank is holding, the amount of cash the bank is holding, the FDs they're holding. That phenomenon does not move in the same proportion as a retail asset, because your most of the loans that you take today are external benchmark rate, right? So the moment the rate gets changed on repo, you will change the rate for the consumer, but it does not happen for your FD. So your saving rate will not increase with the same amount, because it's dependent on a bank specific cost of fund that you want to mobilize on. That is the difference. So obviously, if you take it globally also, US, UK, you have seen interest rates moving up, but the cost of deposit rates for these consumers have not moved up with the same number. So the problem is that you have a 6.5-7% inflation sitting at you. Your FD rates are at 5.5%. So if I invest in FD, it's a negative return that I'm getting. The FD rates for a consumer just on this platform, I can tell you, has to be better than your inflation to make positive impact on your income. Otherwise, it will be a negative investment for you. So this is my guidance to the entire.
Pankaj, can I intervene? Sakshi, with your permission.
Pull out the FDs, pull out all your FDs. Is that what you're saying?
One quick intervention, Pankaj, and I know Anand also wants to come in. Pankaj, is it possible for you to tell our viewers what is the average term deposit rate for a deposit above 1 year and a 3-year deposit?
So broadly, it ranges from bank to bank, but normally we have seen about 5.5% is the current rate after all the changes I've seen in most of the private banks. So if you can look at peacefully around 5.5%, and this is pre-tax, it's not post-tax. So this is how your deposit rates are. In for 1 year, it'll be like 4.75 to maybe that 5.25. That's how the broad range is. It's 100 basis points depend on bank to bank, but broadly the range is what between.
So regardless of foreign investors pulling out, retail investors who are looking for a slightly higher risk adjusted return will continue to go to the markets, right, Pankaj?
Yes, that's our view as well.
Yes,
Anand, you are coming in.
So just to add, what Pankaj said, my advice would be pay the unsecured loans, especially the personal loan and the credit card, because things like home loan is priced lower, relatively priced lower. But it's a very high interest rate on the personal loan, the credit card. My advice would be repay the unsecured part. Second, on the deposit side, if there's a redemption or if you have fresh money you want to deposit, lock it for short term, 6 months, 5 months, less than a year, because at some stage in future the interest rate will go up. There's already 90 basis point hike. Some more hikes will happen going forward. So at some stage in future, we'll see deposit rates going up. Even today I was reading at the HDFC they have raised the rate. Okay, so lock it for short term. Wait, and if you lock it for 3 years, 4 years, then it's very difficult. You'll end up paying bigger penalty. So lock it for short term. Wait for the rates. If they go up, then you can maybe again for 1 or 2 years.
Okay. Pankaj, do you agree with that? And would you also add on to what all the customers would be, looking to understand as far as their EMIs are concerned? I want to ask you, should one prepay their loans at this point in time, or should one invest that money? Give me that answer for all our viewers right there.
So basically, when you look at home loans, right, if I have a home loan of 20 years, in the first 1 or 2 years, if I prepay, at least, 5%, that's our formula for everybody. Whatever your outstanding on the home loan is, if you pay 5% of that over and above your EMI every year, you will save at least 24 to 36 EMIs over a period of 20 to 25 years. It's a very simple defined formula. The more you pay earlier in your home loan, the more you pay. For example, I take the home loan today. If I pay it today, it'll be the best thing that a consumer can do. First, second, third year are the most critical years for home loans. You should prepay as much as you can, more than your EMIs. You will see a substantial decrease in your tenure. So if I pay 10 to 15% also, you will see a magical number comes to you when you look at an arithmetic formula. And that would be brilliant for consumers. So every consumer who takes a loan, I would say, please, in the first 2 to 5 years, pay as much as prepay as you can, more than your EMI. That's a simple formula. If you can't do it for the entire 20 years, just pay 5% more than what you are getting as an EMI every year. That will also reduce substantially your overall outflow on the interest side. So that's one thing. Second, I think what Anand said, I am completely aligned with Anand's view. I think there is no disconnect that we can talk to consumers. He should prepay all his unsecured liabilities first before investing and saving. So I think that's my aggressive stance that I have given to consumer most of the time, because obviously you are 5.5% against an 8.5%. It always logically makes sense to do that. So I think something, but obviously you should have a corpus for your own, I would say emergency fund, which could be a percentage of your overall income, which you can park into your saving account or FD, so that in case of emergency, you can use it. But today, with digital payments in picture, you have credit cards in picture, you have that kind of a cushion that a customer can use it for an emergency standpoint. But obviously, on the show also being a card issuer, I will not say don't, leverage on your credit card, pay it in time, but you can use on EMIs, which are very, very comfortable for consumers to pay. So
this 5% prepayment, just for the knowledge of those who might have heard this for the first time, this additional payment, whether it's 5 or 10%, how much does it go towards the interest part and the principal part? Is there a formula that banks employ?
Yeah, so normally if you look at if you paid initial years, it'll go majority into interest, but obviously it depends on which year that you're paying on. If you're paying on the first year, obviously 80-90% will go in the interest, and the balance will go as a prepayment.
So the same ratio that of interest versus principal that is prevailing on the overall amount gets applied on the additional prepayment as well.
Yeah, and the balance will reduce. So obviously your next will also reduce. It's like a reducing balance kind of a payment that you look at it.
I think this is a great bit of advice for the young borrowers. Cut back on those 2 restaurant visits and pub visits in a month and prepay.
Prepay.
Just summed it up beautifully.
Absolutely. And that's what exactly is needed, in terms of what we need to do with our outstanding loans at this point in time. What do we need to do with our savings at this point in time? Perhaps deposits at this point in time, when they're not rising, it will give you negative real rate of interest. So definitely diversify your investments, because we are in for some more hikes to come, as most of our panelists also did point out, in this currently rising inflation rate scenario as well. So we are in for trouble from all sides. We need to protect and wisely invest our money and protect our money and help it money grow as well. Thank you so much, panelists, for being with us on this discussion and helping all our viewers really make the most of what was announced by the RBI governor today. Thanks a lot.
Thank you, Sakshi. Thanks.
Thank you.